Let's see, first segment 8:30 cut. Mike's hot 3, 2.
Welcome. You're listening to the Best of Investing on Fox News Radio 9:10 a.m. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, this is our format. A few people sitting around a bar having drinks, without the drinks, talking business with you, the audience, listening in. And I'm your host, Edward Brown. And I'm honored to have as my co-host Mark Hanf of Pacific Private Money, California's premier private lender, and a new co-host, Brian Burke of Praxis Capital. Ken Winans couldn't be with us today, and he's a featured Forbes columnist. Now, our new phone number, again, we're going to repeat this a couple times, is 888-912-1190. That's 888-912-1190. Make sure you write that number down because we're going to have you use that for answering trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort Marina, which is located 1 hour northeast of San Francisco. And today's trivia theme is famous lines from the movies.
Aha!
All right.
Like that.
You like that? Okay. And the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Our website is bestofinvesting.com. You can email questions or comments to edward@bestofinvesting.com and check us out on Facebook. I got to make a quick little promotion announcement for us. It turns out our rankings are really good. We have moved up to number 7 in the state of California in the investment category. Yay! Okay. And a quick announcement. World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of wrap or bowl. If you mentioned the Best of Investing, go there for lunch today. We're just going to get right into it. We got a busy show today. We have an excellent guest on. Mark and Brian, what is going on in real estate?
Yes, well, those regular listeners to our show know that we, try to give you, the news behind the headlines and make sense of all of this, crazy real estate news we read. And we all know about the media. If it bleeds, it leads. And I've got a classic article I just, found this morning. It says, California home prices off 6.2%, 7th worst drop. Now, we've talked about it on a couple of other shows recently about, there seems to be in the public's mind this expectation that home prices are still going down, and that's contributing to, I think, unexpectedly, slow home sales. Sales of existing homes for August, for example, were down, unexpectedly, and I think there's this perception that people have if they wait, maybe till maybe next year, the housings will be even cheaper, and that's just really hurtful to our capitalist economy. We rely on the consumers and the buyers out there to make buy decisions.
You got to lie to the public.
Well, no,
tell them it's going up.
But here's the thing that says California home prices off 6.2%. But then if you read the article, which oftentimes you don't make it past the bleeding headline, it's when you take distressed transactions out of the equation. In other words, the REO. In other words, bank-owned sales, if you buy from the bank, that's known as an REO, purchase transaction, or short sales where someone is underwater on their property and they're selling it in a short sale. If you remove those from the statistics, California home prices are down year over year less than 1%, which I think is really interesting. And what the news, that's good news for people who are, for example, fixing and flipping, because a real estate investor is out there buying homes from banks, REOs, or short sales, and they're getting these good prices, as evidenced by the fact that the majority of the price drop is really reflected in those distressed sales. So the investors are out there buying them and then remodeling the home and putting them back on the market. And what we're seeing is that arm's length, normal market sales, non-distressed prices are actually pretty darn stable, and that's good news. But what it also tells me, if you're thinking about buying a home, it probably isn't really going to pay for you to wait. In fact, if you qualify for these incredible low interest rate, in some cases, you can get a home loan for under 4%.
Yeah, I heard that recently. In fact,
Don't wait.
Brian, you've got some statistics out there that kind of back some of that up.
Yeah, and Mark, they say that real estate markets are local, right?
Yeah, absolutely.
Well, do you know which state in the union has the highest rate of house price appreciation?
I don't. Is it Texas?
Well, you might think so because that's the strongest economy, but it's West Virginia, believe it or not. Up,
Because we're going back into the coal business, coal mining, or?
that's the one.
What's
I
in
can
West
think of.
Virginia? Don't they have like a tech industry out there that's growing? Or
And mining, and one of the other big ones was North Dakota, which has a big oil industry now.
West Virginia? Well, I know in the Bay Area, I think the fastest appreciation market would be Silicon Valley, because I hear home prices are actually, it's like one of the few places in California where there's actually measurable increases year over year in pricing because of all the tech and all the
Well,
internet
even in the
stocks.
commercial market, which eventually we'll get to our guest who will get into that, but West Virginia, that's amazing.
Yeah, that's pretty amazing. And, so it's interesting when we talk about these real estate prices and how statistics will come out from one area to another, and they're always just so much different from one area to another because real estate is a local market. But here's another interesting statistic that I came across. Did you know that the home ownership rate in the country had its biggest drop in 70 years this last year?
Is that nationwide?
Nationwide.
Now, is that because of foreclosures, or did they pinpoint specifically what the reason was?
Yeah, it's mostly the foreclosures. So you have a lot of people that are getting foreclosed out, and then they're turning to rentals. And what's interesting is for every 1% drop in the home ownership rate, 1 million new renters are created. So the rental market is just going through the roof right now.
Well, rents are, there was an article in the Chronicle this week that talked about how rents are up quite a bit year over year. In fact, what San Jose, again, Silicon Valley area was one of the leading communities, up like 6%, I think the number was, but pretty much throughout California, rents are on the increase.
That's right. In some areas, as high as 10% a year.
Yeah.
Wow.
So, which if you could qualify to buy a home, I think you're in a situation in the market now where you could probably own a home for a lot less than you could rent the home.
Well, we're buying a lot of houses as rentals, and they're absolutely positive cash flow. So now you can buy a home and have lower expenses than renting.
Well, yeah, Mark, you I remember a couple of weeks ago, or maybe a couple of months ago, you were talking about lending money out to some people who were getting like a 12 cap or 15 cap on some of these.
Well, exactly, and Brian and I are both in the business of working with people who buy real estate, sometimes to buy and flip, but also to buy and hold. And that, we're in a market right now in California that's unique to my 30 years real estate experience, and that is that you can buy a home. You could even use private money or a hard money loan through a company like ours, Pacific Private Money, and pay 10% for like a 65% purchase money loan. Buy rental income property, and even with a hard money loan, it's still cash flows. The
But
rents are so high right now that
Yeah.
that matrix of being able to buy and have cash flow property. I mean, you used to 10 years ago, you were buying real estate in California for basically the tax benefits and the appreciation,
Well, but here's
and not for
the
the
thing,
cash
though,
flow.
but nowadays, because of the down payment percentage, that's what I think is getting tougher, isn't it? And the banks
Well, it
are
is.
more
Yeah.
It
stringent.
is.
on
That's a
the
big
requirement.
component of
You
it.
can't get 100% financing easily anymore, if at all. So that's the thing. It's you got to have. It helps to have W-2 income. The banks really want to see that if you're buying a home today. If you're self-employed, which a large percentage of Bay Area residents are self-employed. There was another article this week that talked about just how difficult it is for the self-employed to get access to those great 3.75 30-year fixed loans that are available now.
That's amazing. Hey guys, we are going to have to get to our first commercial break. When we come back, we're going to introduce Catherine House because she's in the house with us in the studio.
Awesome.
She's an expert in commercial real estate, so it'll be interesting, and you're going to love her accent. All right, here is the first commercial break. All right, here's the first trivia question. In what movie does Pat Morita say, Danielson, wax on, wax off? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In what movie does Pat Morita say, Danielson, wax on, wax off? Again, 888-912-1190, and make sure to include your name, your address, your email address, and your phone number, and we will be right back. Okay, wait, how much time do you get?
Awesome.
9:17.
9:17, yeah, it's cool. I figured it was time to...
Yeah,
Okay.
you.
What's your question for?
I got a little
like
bit
it's
better.
early and I figured.
My
that
question
you
is,
should not big deal.
can you
Yeah,
share
that's
some of the
helpful,
trends you're
actually.
seeing?
Ah,
Gives us more
I like this.
Yeah,
one.
it's a good one.
I like the ones that are nice and broad.
files.
That's
No,
right, that's
yeah.
short.
I've got some,
1990,
bigger picture and some what I'm mostly seeing as well.
Good.
We've been cutting it just a tad close. So
Okay.
just
And then I think someone was going to ask me about
so
buying
that's
versus
why
I'm gonna,
leasing.
yeah, buying versus leasing, that's my question.
But
And then another good question might be, how do buyers find distressed real estate? As a third question.
What about distressed real estate?
How do buyers find it? How do you go about buying
Yeah,
distressed real
that's
estate?
a really
That'd be a
good
good one
question.
for me. That's right up my
Okay,
alley.
why don't you ask for that?
I'll
How do you,
that one too.
and that one as well? Okay.
So Brian will ask the trends,
Yeah.
seeing and finding.
You're gonna introduce her and ask a question?
Yeah.
Let's see here.
Cool. My question was going to be forecast for 2012. Yeah, I can ask that, sure. And then Mark, you'll ask about SBA.
Yeah, buy, lease or buy, which kind of goes into,
Yeah.
SBA opportunities.
I think this might be the first trivia question I might know the answer to.
There you go.
I don't know the answer to
I
it.
never,
We'll let you answer this one.
I
here,
never
right?
know the answer to any of his trivia.
Really?
No, I don't know. They always just seem to go right over my head. But I don't know.
You know the answer. Okay, we'll come back. We'll so I have a little introduction here for Catherine.
CRE. INC.
And you can just say Sperry Van Ness if you don't have to.
Yeah, that's what I was
Yeah.
going to say. Spirit Venice, yeah.
Can you say it like she can say it?
Oh no, not quite. Go on.
Actually, quite has a different meaning. In America, it means very, whereas in the UK, if you say that's quite good, it means it's average.
Really?
Yeah, so if you're very careful.
Son of a gun, I learned something today.
Oh, see? Well, we should have that on the show. That would be good. That's good.
No,
stuff.
I need a spot of tea.
You know,
you
spot
want
might
to
be
do
different.
No, sure.
Oh, you're a CCIN, awesome.
Okay, I'm an SOB, but who
And,
cares?
and
That's
I'm
tough.
a
That's
chartered
right.
surveyor as well. That's what the FRICS is.
Oh, the Fricks?
Yeah, the FRICS.
Chartered
Did you say surveyor?
A chartered surveyor. So
What's-
it's actually a global commercial real estate designation. I shall put these.
Interesting.
All right, that's good.
Good.
That's when you're ready.
alright. 3. Cut at 10:30.
Yeah.
3, 2.
Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hoff of Pacific Private Money and Brian Burke of Praxis Capital. When we cut to the first commercial break, we ask this first trivia question. In what movie does Pat Morita say, Daniel-san, wax on, wax off? Brian, I see your hand raised.
Well, you know, I never know the answers to any of your trivia questions, but I think I might know this one. Is it The Karate Kid?
It is the Karate Kid.
Oh,
Very
watch this one, 'cause
good.
that's why I didn't know the answer to that.
Okay, first three callers won a free 3-day, 2-night stay at the Lighthouse Resort. We are in the studio here with Catherine House, who is a 15-year veteran of commercial real estate market. She's responsible for brokering commercial real estate investments as well as selling performing and non-performing loans throughout the San Francisco Bay Area. And she's currently assisting local and regional banks as well as special services with market intelligence. I like that. Broker opinion of value and surveillance of potentially troubled assets and disposition services. Some of her clients include U.S. Bank and Union Bank, so she works with the big boys. And you're going to love her accent because afterward we're going to get a spot of tea. Catherine, welcome to the Best of Investing.
Thank you very much. It's a pleasure to be here.
Okay, now you don't really have to have that accent, but
Unfortunately,
oh, that really is real. Oh, okay, I'm just teasing you.
Hey y'all.
Okay, y'all, that's right.
I
Okay,
can't keep
so
that one up there, I'm afraid.
Yeah.
That's our Texas accent.
That's right. Okay, so, since you are the expert, I'm just going to come right out and ask you, what is the forecast for 2012?
Well, 2012, my prediction is we're going to see actually more of the same that we've seen in 2011. 2011 for me was actually my best year since 2006. As many of you may know, the high point for the commercial real estate market was the second quarter in 2007, where we saw some real record prices being paid. And since then, since that high, we saw US property volume fall from a high of 452 billion in 2007 to a low of 52 billion in 2009. So we went from unprecedented growth to almost nothing. And now sales volume is up over 100% year on year. We saw $56 billion worth of sales in the second quarter.
And what do you attribute that to? Well, what increased?
Confidence mainly coming from small businesses. A lot of buyers think we've reached the bottom of the market in terms of prices falling for commercial real estate buildings.
Catherine, I know that's is that a nationwide figure? Or, because I know
That's a nationwide
like in
figure.
San Francisco, apparently commercial real estate's like off the charts again, which is...
Absolutely. And of course, in the San Francisco area, we are a little bit of an island, and we have some really, really strong sectors behind us that are really going to be driving us forward. So when you look at some of the strongest companies in the US, a lot of them are based here in San Francisco.
And is that in all markets, like industrial, commercial, warehouse, retail?
Well, we're really seeing some of the strongest growth at the moment in the office sector, particularly for empty buildings south of Market, these creative brick and timber buildings, where we're seeing values in excess of $400 per square foot, where a lot of these smaller tech companies are coming in and they want to be down there and everyone else wants to be down there with them.
Now, how much per square foot was it back at the high, 2007?
Well, we were actually almost seeing similar numbers. And of course, one of the difficult things about statistics is it lies, damn lies in statistics.
Yeah, exactly.
And so what can be masked with the figures is the general, there's an individual building that could be a creative brick and timber building of the right size south of Market that could actually be achieving really record pricing.
Sure.
Simultaneously, you might have a building, a small B-class building in the financial district where tenants have no interest in being in vanilla space, and they're seeing some pretty high vacancy levels. So you really have to look and dig in behind the numbers.
Well, I remember during the .com, Sunnyvale was like that. Whereas it was ridiculous, $1,000 a square foot for an office building.
But isn't there a lot of distress in the commercial real estate market still right now? I mean, the city just came off your best year ever, but much like single-family homes, there's still a ton of underwater homes and a lot of foreclosures looming. Where's the distress in commercial real estate still today?
Well, actually, I think a number of buyers out there have been very disappointed that the floodgates did not open. So a lot of the loans that were done in 2005, 2006 and 2007 at the height of the market, those loan maturities have been coming due and they're going to continue to come due next year, 2013, with the bulk of them really not through the system until 2017. But what the banks are tending to do is extend these loans and actually try and work out loans with the existing borrower rather than simply go in and foreclose the first time they miss a payment.
Do you think they're going to continue to do that as the market is strengthening?
That's a very good question.
Yeah, because the banks don't want the buildings, right?
Unless they can make a profit.
Well, no, but a bank doesn't, because when they have to take it over, if it's in a distressed situation, there's all kinds of regulations with loan loss reserves, and then if it's troubled, it's one thing, but if they actually have to foreclose, it's a whole other thing. I mean, they really don't want to do that if they don't have to.
Right,
Unlike us private lending lenders.
And of course, in a weak market, they're going to do everything they can to keep that borrower paying and keep that loan on the books and not get the property back. So
absolutely, and I think that's one of the reasons why I'm seeing a lot of the buildings that are being taken back. Oftentimes, it's buildings where the business themselves has been in occupation. Their business has not been doing so well, and they've been unable to pay their rent. So I'm actually seeing a lot of vacant buildings, vacant office buildings, industrial buildings, small commercial neighbourhood buildings that I am selling mainly to small businesses out there. And I think one of the reasons that those buildings in particular are coming onto the market is because they don't have the income coming in that's able to service the loan.
So if a listener out there owns a commercial property and they've got a commercial note that's coming due or looming, and what recommendation do you have for them in terms of what they should be doing now?
Well, you need to have a team of good advisors around you, but the key thing is communication. You need to be actively communicating with your lender at all times. I mean, the sooner you can get that dialogue going, the sooner they feel that you're giving them all of the facts and figures, the more likely they are to actually want to work with you.
So you don't just stop making your payments and wait for them to come to you.
Absolutely. That would be a mistake, in my opinion.
Do you think some of the lenders in the first conversation are just saying, well, we just want to be paid off as agreed? It was a 5-year loan or a 7-year loan, we want to be paid off, and if that's not possible because values aren't there, are you finding that clients are having a measure of success in getting the bank to actually come and negotiate a loan extension?
Well, I think a lot of us have heard the term sort of extend and pretend. I'm not sure that's actually anything that I've seen with my own clients. They certainly aren't under any pretense about what's going on.
You know, you better explain that. I mean, us real estate people understand that, but maybe the audience
Extend and
doesn't.
pretend.
Extend and pretend. What is that?
So, when a loan is coming due, rather than simply saying, you need to be, paying off this loan with a balloon payment, or then really what they're doing is they're sitting down with that borrower and saying, what can we do? What will make sense for you and the building and us to potentially, let's say, for example, extend the loan out more years and reduce the actual amount of mortgage obligation that's going to have to be paid.
So they are reducing the principal. You're finding that? Or are they just
This is not the area. The buildings
Okay.
that I'm selling.
Yeah.
These are the ones where they've not been able to work things out, where the building or land has been taken back by the bank, and then my task has been to sell it potentially to the new businesses that are growing out.
You know, I can't remember who this borrower was. I think it was somebody fairly famous, and he had a room full of bankers, and he knew the situation was getting pretty dire, so he came in with suitcases full of keys, and basically said, "You don't want to work with me? Here," and he emptied out like 10,000 keys and said, "Okay, have at it, boys. The building's yours."
So you mentioned that the floodgates of opportunity for commercial buyers really hasn't been there, but on the sales you've done, are there still opportunities to buy commercial property at discounts?
Yeah, no, absolutely. I think the two types of assets that seem to be selling are the trophy assets and the distressed assets. And so, what I'd recommend for those listeners who are interested in finding assets out there is, if you're looking to buy assets, my company has a national website. We're in 38 markets, over 850 brokers, most of whom are actually selling REO, bank-owned real estate, and we also have an excellent note platform as well. But for the buildings, you would need to go to www.svn.com, that's Sierra Victor November.com, or for the note sales, you would actually go to our note sale platform, SVN Benewolf, which is www.svnart.com.
And those are for commercial notes for sale, distressed
Absolutely.
notes?
Now, for note sales, I wouldn't recommend that you go into note sales unless you have a really good team around you. You would need a great
Absolutely.
attorney. How are you going to service that note? You really need to make sure you're aware of all the pitfalls. So I would not recommend that for an amateur investor.
And just as a reminder, we are sitting here with Catherine House, who's a 15-year veteran of commercial real estate market. She's giving us quite a lot of information.
So I'm a big buyer of distressed residential property, but not so much in distressed commercial property. So if I'm wanting to go find a commercial property as an investor, how would I go about doing that? Would I call you?
Oh, and you
Would I
know
go to
what?
a website?
That's a great question, and when we come back, Catherine's going to answer that. We are going to cut to our second trivia question, and here is the trivia question. Second portion break. In what movie does Al Pacino say, as playing a mobster, "Say hello to my little friend"? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. We always have a lot of fun here with a little banter. Their website, I got to keep it light, especially with the real estate market. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. And what movie does Al Pacino, playing a mobster, say hello to my little friend"? That's not so good. Call 888-912-1190. Make sure to include your name, address, email address, and phone number. And we will be right back.
And I hear they're doing a reboot. They're going to remake Scarface.
Oh, you got it.
Is that it?
I got that one.
I told you when you said it was the only one I ever knew.
How much individual time was that?
11:23.
11:23?
That should be a good remake.
Actually, yeah, that's really what I got here.
That was gnarly enough movie back in 1985 or whatever, 1990, whenever it came out.
When that came out.
Scarface.
Say what?
Hello to my little friend.
I'll ask you. Go ahead and say, that's one I didn't get. When we'll cut over to Mark.
Yeah, that's what I just don't know.
Having fun?
Yeah, no, absolutely.
I still got my question.
Yeah, I was gonna say, you still have your question.
Yeah, I did.
I still have my first question of sharing trends, but I kind of felt like we covered it a little bit already
I
of
thought
sharing
you
trends.
sort of asked
Yeah,
it,
we
but-
did.
Yeah, Mark kind of asked one question and you kind of led off into some trends, and I thought, I don't want to be repetitive.
Yeah, no, that's okay.
So I held that one off.
So, besides covering your SBA question, what else do you want to cover specifically in this segment?
Well, I thought we could chit chat about that for a while. I mean, you could give some stories of some different deals.
Yeah, I like to
and,
hear good stories. Good stories.
Stories are always good. Yeah.
Stories are always good.
I'd be interested about the buyer profile. Are you
Yeah.
seeing a lot of investors in the market, or is it primarily owner user?
Perfect. That fits right in with the SBA.
Yeah,
Okay.
exactly.
Yeah, great. All right.
Are we leading off about finding buyers for distressed commercial assets? Yeah.
Yep.
Well, so how did,
How do buyers find out about how do the buyers go about finding distressed commercial
okay, I guess we
assets?
kind of covered that, but I can go with
About the website. So I said,
Yeah.
would they call you?
Of
course
or
they
go,
would call
or go
you.
through their own broker as well.
Yeah. So I think maybe a lead off might be how to contact her.
Let's do that at the end before we cut to the last break. That way we can finish off with that. Great. All right.
All right, 3, 2.
Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Brian Burke of Praxis Capital. We're in the studio here with Catherine House, who's an expert in commercial real estate. When we cut to the second commercial break, we asked this trivia question. In what movie does Al Pacino, as playing a mobster, say hello to my little friend? Now, Brian, do you know the answer to this one?
After you had the last question, I thought I was going to know all these, but I don't know this one.
You must not go to the movies too
I
often.
know.
Okay, I know this guy does. Brian.
Oh, yeah.
Mark.
That was the Scarface.
Scarface.
And they're
That's
supposedly remaking that movie too, which I would be thrilled to wait for that one.
Where is Al Pacino going to be in it?
No.
Or he may
Maybe
be
a
a
reboot.
maybe like the dad or something.
Yeah,
Okay.
I'll do a cameo.
All right. So, Mark, you're going to ask a question about SBA financing.
Oh, right. Well, are you working, Catherine, with owner-user buyers? I mean, are there opportunities, particularly with maybe distressed commercial real estate, for someone to maybe buy as opposed to lease? Maybe they're leasing now and they're looking for an opportunity to buy a property for their business.
Absolutely. I mean, going back a number of years, back prior to 2008, the majority of these vacant industrial and office buildings, certainly in San Francisco, were being sold to developers. But in today's market, the small businesses are really leading the way, and the majority of my sales this year have been to businesses looking to occupy the buildings for their own business. And I think the interesting thing there is for businesses, it's not the right thing to do for every business, but to compare the amount of rent you're paying on your lease with the amount that you would be paying through the loan, in many times it actually makes an awful lot of sense.
How much of a down payment does that borrower have to come up with?
Well, the great thing at the moment is SBA lending is alive and well and very, very healthy, very, very active. So 90% loan to value, that means that the business owner would have to come up with 10% of the purchase value. And thereafter, the monthly payments would
From like
actually...
the old days of residential, where you only have to come up with 10% down. But
Absolutely.
also
This is a government-backed loan, so in many cases, the loan, 40% of the loan is actually backed by a government-backed SBA loan guarantee, and the remaining 50% is a first loan with your primary bank or another bank or out there, conventional bank.
And as I remember, to qualify for SBA financing, the occupant, it has to be 50% or more occupant.
Yeah, 51%,
51%.
51% or more, which is great news for businesses because it does leave some room for expansion. You can come in and buy a building that actually has a tenant in part of that space, which will actually provide you with some additional income. As well as some
commercial real estate in San Francisco, where the rents are really high.
Absolutely, and I think that's one of the drivers. I mean, we've actually seen significantly increasing rental rates, and they're predicting, average Class A and Class B office rents at the moment are hovering around 40%, and we've seen transactions done at over $70 per square foot in rents.
So is that bringing in any investors to purchase in commercial real estate?
Absolutely. I mean, the institutional investment buyers are out in force.
That's kind of weird because the economy still doesn't seem like it's really picking up, especially with
San
the unemployment.
Francisco is an island.
Yeah. Getting back to SBA
West Virginia.
financing, I just want to mention that, just point out that it's not always necessarily bank financing that you have to qualify for, but I know you're working with a local Bay Area lender that has privately financed SBA. So for someone who's really looking to buy maybe a property for themselves, much like we at Pacific make privately funded loans in addition to bank financing options, we can do privately funded loans to help people buy investment real estate. You're working with a firm that has some private money options for buying commercial real estate with SBA guarantees, and maybe the qualification requirements are not as stringent as some banks.
Yeah, no, absolutely. There's actually, I'm not sure I want to go into necessarily naming individual
Well, they need to call you to
lenders.
find out.
Absolutely, absolutely. But there's a number of both conventional banks and other types of lenders and SBA lenders out there who are actively looking to give away loans, give away money. And so,
The operative term, give.
well,
Not lend,
maybe give's not the right word.
Can you share a couple of interesting stories with us?
Sure. Well, so one of the most recent SBA transactions I did was with a tenant. I was actually representing the bank-owned retail building, and the tenant was actually paying a relatively high rent for his space. And so we'd actually ended up in that particular scenario that although we had a lot of interest from investors who wanted to buy the income coming from the tenant, what ended up happening is the tenant himself ended up getting SBA financing, and he bought his own space. And the great thing there is he's able to tear up his lease, pay less money, and for him it really worked because he wasn't planning on moving, his business wasn't planning on growing in size. I mean, for a lot of these companies out there where they're doubling or tripling their workforce every 6 months or year, an SBA, buying your own building may not be the way to go. You might be much better off actually having a lease where you have a lot more flexibility.
Yeah.
But for many businesses, this is the time to be out there looking.
Now, if Mark, this is more of a question for you. If someone wanted to buy their building and do SBA financing with the 90%, but they don't have the 10%, what could you do for them? It sounds like only if they cross-collateralize it with something else.
If they have lendable equity in any other real estate, we oftentimes make business purpose loans to people who own real estate, and it's either maybe it's free and clear, and they just want to take $100,000 or $200,000 or $300,000 or $500,000 out because they need it for a down payment on other property. Yes, we do that all the time. So that's a great use for a private lender, is to go to them and say, hey, I've got some lendable equity on this property. Can I pull some money out of that property because I need a down payment to acquire a property for my business over here? Yeah.
Brian, there was another question you were going to ask me?
Well, we were talking about finding distressed real estate, and in the residential arena, which is where we do most of our business, a lot of people ask me all the time, can I just go straight to the banks and buy the houses straight from the banks? Well, the same thing could happen. It doesn't work. So in the commercial arena, does that work? Can people go straight to banks and buy real estate, or is that just a myth?
That's just a myth. I mean, the banks are under an obligation themselves to report to their shareholders. They're not going to do an off-market bank with an off-market deal with an investor. They really need to be out there making sure that they're getting the highest possible price, and they need to make sure they're marketing that property with a reputable broker.
And do they package those like they do loans? Because sometimes they might want to grab $300 million at a time rather than a one-off type deal.
We do see auctions, and in fact, Story Van Ness has an auction platform, and certainly on occasion that can be the appropriate direction to go. For me personally, what I've seen more of is individual assets where I package and market that individual asset to who I perceive to be the most appropriate buyer. So, for example, at the moment I'm selling a two-story commercial building in Petaluma, and I'm out there targeting local businesses and people who might have an interest in actually occupying a nice two-story 6,000 square foot building in that area. Likewise, medical office buildings in Oakland, retail pads in Santa Rosa, commercial buildings in San Francisco. So, I'm very much directly targeting my marketing to who I perceive will be the most appropriate buyer.
What are the rates right now for SBA financing?
Well, they change each month. So we are at historic lows.
Well, that sounds familiar.
Yeah. I mean, rough numbers right now.
Oh goodness.
I mean, can you get 5% financing commercially?
Or less.
Yeah.
Or less?
Or less.
Really? Oh my gosh.
Yeah. Yeah.
For
no,
commercial,
absolutely.
that's fabulous.
That's really low.
And,
yeah.
and I think the great thing there is you actually have the spread. Then if you are able to buy an investment property where cap rates or the year one return is actually going to be greater than the interest that you're paying on
Yeah,
your loan.
exactly. But how long does it take? Because there's a lot of hoops you have to jump through.
There are, and this is where companies like yours that do hard money loans can come in and be very, very useful to give people, say, bridge loans. I don't know if your
Exactly.
company does that.
Oh, we do,
because
absolutely.
if I have two competing offers come in,
Yeah,
and
exactly.
one of them is all cash and one of them is contingent on a loan, the all cash deal is the
If
one
they're
that
all
we're going to
cash.
take.
How often are you seeing that all cash?
Quite frequently, people will often refinance after the fact.
And can you get
Yes,
SBA?
exactly.
Can you buy a building and then use the SBA to refinance, or is it strictly for purchase?
SBA financing is really very focused on small businesses occupying their building. It's not for investors.
No, what I mean is, do you have to? Can you do it for after you refinance? Can you do it as a refinance, or do you have to just do it from the get-go as a purchase? Because I've heard sometimes SBA they don't want to
Yeah,
do
it's.
refinancing.
I mean, SBA loans.
I've heard you can refinance now more. It used to be harder, and I've heard
Yeah.
it's easier to buy cash and refi with an SBA loan.
Okay.
That might be worth something like
Guys, we want to thank Catherine House. Stick around. She's an expert in commercial real estate. Again, give your phone number out in case anybody wants to get a hold of you.
Sure, my phone number 415-837-1200, extension 12.
Great. Thank you very much. We're going to cut to our third and final trivia question. Here it is. In what movie does Mike Myers say, and I should probably turn this over to Catherine, "Oh, behave"? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In what movie does Mike Myers say, "Oh, behave"? Call 888-912-1190. I might have to move to England. I do that pretty well. Make sure to include your name, address, email address, and phone number. We will be right back.
that. Brian will have to answer that one again.
I can picture it. And I can see the guy.
Yeah, do that. Do that.
The guy with the teeth.
No, don't tell him. No, do that. Yeah, do exactly that.
Maybe I'll think of it by the time we get back.
You're on the spot.
I know, right?
Okay, so I show here that we have 11 minutes and 9 seconds. Sound about right? So even though we'll talk about other things, please pipe in. Just a roundtable type discussion. We'll get into email time.
Yeah.
And again, I think for the contact information for me, the website's the best one because the website's got my bio,
Yeah.
it's got no sales stuff, it's got all the listings.
And sometimes
So-
what happens is I'll receive an email, or people will go back to our podcast and listen to it. I had a situation where someone emailed me and said, you had someone on a couple of months ago, but I didn't get his information. Can you
Right,
pass
right.
that on to me?
And I think the website's great because it's got
It's got everything.
it's got
yeah.
national
Right.
listings.
How much full-time do you?
31 minutes and 51 seconds is what I had, but
Okay. Yeah.
that's pretty close.
Yeah. No, that's right. I'm 1 second off from you. 31,
Okay.
50. But
Now we have to leave a little bit of time
Yeah,
for
that's
him.
right.
So we'll leave. How about we leave the 9 seconds?
okay.
Okay. So if we're going to be doing 11 minutes at the 9-minute 30-second mark.
Yeah, 9:30 cut.
9:30. Okay.
So do my question, I'll answer it. Then you want to got a question for Brian, or Brian, you want to get asked a question so you can kind of
Yeah,
talk about what
yeah.
you
I was
got
going to
going
say
on?
that
Gotta
because
plug your
everyone
track.
knows you're. Well, I think everyone knows you're new, but they may not. I'm going to just say we received this email, and Brian, why don't you answer it? So what would be a good one that will just give you a nice softball question?
And I like the teeth comment. You definitely should do that little
Yeah,
thing about the,
exactly. Yeah,
What's the
you'll go, I can't remember who it is.
What
and
was
it's
it?
the guy with the teeth. Yeah.
And I have actually a dental investment in San Francisco, so you
What she thought of the OB that thing?
Yeah, the OB Haig is
Yeah.
the guy with the
Okay.
teeth. That's
Mike-
the,
Mike.
Yeah, do that one. But for when the email, like serious stuff, email, what would be a good email that someone could have given us to feed right into, like,
That's a good question.
just maybe see, we received a generic email of how can I invest in.
Well, you had asked me one time, do you do like equity investments in addition to individual trustees?
That's right.
And that's really what Brian's
That's
business
probably-
model is.
Yeah.
So you might want to.
Yeah, that's a
You
good
might
one.
want to say something like, we had a couple of weeks ago, we had a question from Mark about talking about equity investing versus individual trustees. Brian, that's your business. Right?
That's a very good one, Mark.
Yeah.
That's a good one.
You know what? How about when I do it, I'll say, we received a couple of emails. Mark, one sounds like it's right up your alley, and the other one sounds
Yeah,
like it's
okay. Yeah.
Yeah.
Okay.
All right. Okay. The chances of somebody listening who remembers that question from 4 or 5 shows ago is
Right.
probably pretty small anyway.
Right.
Even I forgot it.
Forgot what?
All right.
Okay, guys ready?
All right, 9:30 cut.
Yeah.
Last one. 3, 2.
Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hunt and Brian Burke. And we were this is the third and final trivia question. In what movie does Mike Myers say, "Oh, behave"? And Brian, what was the answer to that?
I don't know. I can picture it, but is it Austin Powers?
It is, the guy with the teeth. That's right, very good.
2 for 3 today. 2 for 3.
And I'm not sure that's true. I mean, a lot of British people have perfectly decent teeth.
Oh, yeah.
I don't know. I keep thinking Roger Daltrey back in the day. Huh?
Oh, yeah.
He's probably got them fixed by now.
Probably.
Actually, talking about dentists, I'm actually selling an investment lease to a dentist at the moment. And actually probably one of the smallest commercial real estate investments for those of you wanting to just dip your toe in the water. 325,000. And the cap rate on that is under 6%, but it's located in Union Square. And I think if there's one thing that Americans love, it's their dentists.
So what's a commercial lease?
Well, it's basically the dentist has a lease in the space. So he is the tenant. So you would be the landlord, and the dentist would be your tenant.
See, you can sell just about anything now.
Well, that's just a typical office building. With,
Yeah,
that's all.
Yeah.
Okay. We received a couple of emails here, and one sounds like it's right up Mark's alley, and the other one sounds like it's right up Brian's alley. So, Mark, this one sounds like it's right up your alley. It says, I've heard you use the term usury, or excuse me, not you use the term, but I've heard the term usury, and that you can't charge more than 10%. How is your company able to charge more than 10%, as I've heard you mention on the radio in previous shows?
Good question. Well, usury is a term that's been around for quite some time, and it's essentially charging an illegal interest rate. And in California, an individual is not allowed to loan money to another individual and charge more than 10%. That violates the usury laws. Now, California licensed real estate brokers, if they broker a loan that's secured by real estate, those loans are exempt from usury restrictions. Therefore, we can make a loan for any interest rate, or we can originate a loan for any interest rate, and we don't have that issue. Now, why this is important is that there's a lot of guys out there that have been making trust deed secured loans or private money loans on their own, maybe just using a title company to drop a note and deed of trust, and they're making loans to people who they find, maybe they market themselves, maybe they're known in the real estate community. The problem with that is that oftentimes they're making an illegal loan, because if they're charging more than 10%, it's illegal. Not only that, there are so many new disclosure laws nowadays, and we use all of the latest software, updated software, which literally gets updated almost on a monthly basis because there's so many new changes, that if you're making loans and you're not using the services of a licensed real estate broker in California to originate those loans, it's very likely you're making an illegal loan, or at least the paperwork that you're using to make those loans could come back to haunt you. I have heard several stories of people attempting to foreclose on a non-performing loan that they originated just using a title company and or maybe a real estate attorney who doesn't have the proper disclosures. And the borrowers oftentimes in cases have a case that potentially the loan was made illegally. And what happens in that case is any payments that the borrower made during the life of that loan
Get applied right to
get
the
applied
principal.
right to the principal, right? It ends
So
up
zero
being,
interest.
it becomes a zero interest or free money loan. So
I want one of those. But, what do you charge typically for your borrowers?
well, actually, let me answer a question you didn't ask, because one of the services we do is that we do documentation services for a number of sophisticated and experienced private lenders who like to loan their own money out to people who come to them. And we will draw the documents, we will properly disclose and write the lender's escrow instructions, and essentially be the broker of record for you. If you want to make a loan to somebody else, or maybe you're a borrower and you know someone who has money and you can't quite get them over the line and close the sale and convince them why they should make a loan to you, if you share your proposal with our company, call us up, we can essentially be your advocate and give your loan request credibility, and because we can basically do the due diligence on your loan request and convince your borrower, yes, here's how we can put this together properly with the right safety parameters and the right documentation.
I can imagine a few listeners, or many listeners, being interested in that. So give out your website and your phone number.
It's pacificprivatemoney.com, pacificprivatemoney.com, and our toll-free number is 800-605-8050. That's 800-605-8050.
And you can always go to bestofinvesting.com and click on Mark there. And then we got another email here that was a little bit more geared towards you, but actually I think it's more for Brian here.
Mm-hmm.
It says, do you invest in equity deals instead of loans? So let's just bring it right over to Brian.
Yeah, Mark and I have talked about this before, and primarily his deals are in trust deed lending, and it overlaps a little bit. Investors that are interested in doing trust deed lending sometimes are also interested in other ways they can participate in the real estate market. And one of those ways that they can participate is by doing equity investments. And there's a number of ways to do that. There's publicly traded REITs is one way to participate. Another would be purchasing the stocks of home building companies and other real estate companies. And then there's also a third way, which is to invest in private offerings. And private offerings are an investment vehicle for the accredited investor. And this is where our company comes in and what we specialize in. We're a private equity firm based here in Northern California, and we have different funds that we utilize for purchasing properties in distress, either single-family residences that we fix and flip, or single-family homes that we're holding to take advantage of today's incredible rental market, and even some one property deals for multifamily property. And we have equity investors that invest in those deals and participate in the cash flow and profits from the deals. So it's different than doing private lending. In this case, you're, in a roundabout way, you're an owner of the real estate instead of a lender on the real estate.
And in those situations, Brian, I know that we talk about how my investors often get 8 to 10% secured annual fixed returns on their money when they make when they fund a loan, when they basically fund a trust deed secured loan. But your investors, and you've been doing that's not just, you're not a flash in the pan. You guys have been around for, or you've been around personally doing this for over a decade, and I've heard some incredible returns that dwarf the numbers I just gave out that your equity investors have enjoyed over some of the lives of your funds. Isn't that true?
Yeah, I've been in the distressed property market for about 21 years, and probably one of the best examples is one of my oldest funds that's been around now 7 years running now, and our average return over the entire 7 years is annualized at 20%.
Oh, that's just amazing. So for someone who's really looking for true diversification, rather than, stocks and bonds and gold and, maybe those all have a place in someone's portfolio. Another way to diversify is to make secured loans like trustee secured loans, and also investigate some equity opportunities with a company like Praxis.
Yeah, and you know, with real estate prices as low as they are right now, I mean, this is a great time to be an owner of real estate, especially if you're getting in at today's low basis. You wouldn't want to have got in 2005 at the higher basis in residential property, but to be in at the low basis that we're seeing now, this is a really compelling story for being an equity participant.
For an investor wanting to invest in your fund, is there a minimum investment size?
There's minimums in each fund has its own minimums. Some are as low as 50,000, some of them are 100,000, and it just varies depending upon the strategy of that particular
You know,
fund.
with a 20% annualized return, I'm sure some people are going to want to call you. So why don't you give them your phone number and
Yeah, here, take my card.
Yeah,
I
that's
want
right.
20%. I want 20%.
Yeah, you can learn a lot about equity investments on our website, which is www.praxcap.com. That's praxcap.com. And they can also call our office at 707-525-1300.
And how did you get the name Praxis?
Praxis actually is a Greek word, and loosely translated, it means translating an idea into action.
Well, you know, it's all Greek. It's all Greek to me. Okay, guys, thoughts for the day, real quickly here. There are more telephones than people in Washington, D.C. You know, I guess the politicians are talking out of both sides of their mouth with 2 phones each. And you burn 26 calories in a 1-minute kiss. I could stand to lose a couple of pounds. I think I'm going to go home right now and practice with my wife. Check us out on YouTube. Type in Best of Investing Radio Show, and you'll check us out, see what we look like. I want to thank my engineer, Hunter Hornstein, for orchestrating this show. Catherine House, thank you very much for joining us.
Yeah, thank you for inviting me.
You're very welcome. We're happy to have you on next time for tea and crumpets. Tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
Awesome. Always goes so fast.
That does.
I know, right?